Good day, Junior Tickies. I'm Mrs. Brimacombe. We're going to look now at Chapter 2, Activity 2. The following information was extracted from the accounting records of SP Traders. The business sells for cash and on credit. So now we're looking at a business where we not only have credit sales transactions, but also cash sales. Now, before we start with this activity, what is important to remember? Whenever there's a cash sales transaction, it means that the business received money. Therefore, it goes into the cash receipts journal. The source document, the evidence of proof of this transaction, is cash register roll or cash invoice. So those are the two options when it refers to cash transactions. Remember, credit sales transactions, bought on credit, customers bought on credit, which means that we will issue them with an invoice. Invoice means debtors journal. The business keeps the duplicate, the customer gets the original. So required, record the following transactions which occurred during January 2024 in the correct journals of SP Traders. Post to the debtors ledger and compile a debtors list on 31 January 2024 and post to the following accounts in the general ledger: the trading stock, debtors control, sales and cost of sales. The last question, show the effect on the accounting equation on day 2 and day 8. Right, so this is the information which is given to you. And you would notice that now in this activity, there is balances and totals that appeared in the books on 1st of January 2024. And then we've got the debtors list as well, which shows all the outstanding balances from the previous month. And this is important now to take note of. When we start this activity, our step number 1 should be write the opening balances and totals in the general ledger and in the debtors ledger. Because remember, at the end of each day in the debtors ledger, after each transaction, we need to calculate the new balance. And now it says there question mark, and we'll get a little bit later into that. Just remember, when a transaction happens and a debtor is involved, we have to take it to the individual's account, and the totals is posted to the general ledger. And then information B, they provided us with the transactions. So once we've written all the opening balances, step number 2, record the transactions, and then the last step, at the end of the month, total and post it to the general ledger. So we are going to approach it a little bit differently. We're first going to start with the journals. So we've got the cash receipts journal and the debtors journal. And the first transaction says, day 2, issued invoice 21 to DUBAD for goods for 1,320 and the cost was 1,100. So step number 1 is to identify, where does this go now? To the cash receipts journal or the debtors journal? So there's keywords. One of them is the source document. If you see the word invoice, you should know immediately that this will go to the debtors journal. Document, duplicate invoice 21, on day 2, from who? DUBAD, or the name of the debtor, DUBAD. This must be taken to his individual account, debtors ledger number 2. The selling price, 1,320 and the cost 1,100. On day 8, sold goods for cash 7,896. The business added a markup of 20% on cost. So they didn't provide you with the source document. So the key word there is sold goods for cash. This means that it must go to the cash receipts journal. But now they've only given you the selling price, so you need to calculate the cost. To calculate the cost, it means we have to take the selling price times 100 divided by 100 plus 20, which is 120. So the source document, cash register roll, on day 8, details, sales, analysis of receipts, 7,896, bank, because it's the only transaction on that day, 7,896, sales 7,896, and now we need to indicate the cost. As I've mentioned earlier, take the selling price times 100 divided by 120, and that's my cost. Remember to draw a line under analysis of receipts to show that you've closed off the transactions on that day. Day 15, sold merchandise costing 2,000 on credit to B. Brooks for 2,400. So when we're selling goods on credit, it means debtors journal. In our debtors journal, you don't need to write the source document again. The only source document that will appear in a debtors journal is duplicate invoice. The next number is number 22. This happened on day 15. Name of debtor, B. Brooks, and we're going to post it to his individual account, debtors ledger number 1. The selling price 2,400 and the cost 2,000. Day 15, cash sales as per cash register roll, 14,950. The goods were sold at a profit markup of 15%. So here you can identify the source document. That's one keyword, cash register roll. The second one, cash sales. It means that it goes into the cash receipts journal. They provided us with the selling price. So analysis of receipt, 14,950 was the only transaction on that day. Bank, 14,950. Sales, 14,950. To calculate the cost, take the selling price times 100 divided by 115, and that goes into your cost of sales. Day 20, sold inventory on credit to. So there's two different transactions on the same day, two different debtors. We start with the first one, the source document, the next number, 23. On day 20, Debtors, this is debtors ledger number 2. The selling price, 2,376. The cost, 1,980. On the same day, I don't need to write the number again, day 20. The source document would be duplicate invoice number 24. Name of debtor, T. Naidu. This is going to be debtor ledger number 3. Remember, we have to post it to the individual's account. The selling price, 6,564, and the cost, 5,470. Day 22, cash sales as per cash register roll, 8,100. The business used a markup of 50% on cost. So in this activity, there weren't a fixed markup percentage. Each transaction had their own markup. So this is to practice a little bit of calculating cost when the markup percentage is given to you. Or it could be the selling price. Let's see. They provided us with cash sales that goes into the cash receipts journal. They told us 8,100. That's the selling price. It means that we will need to work out the cost. To calculate the cost, 8,100 times 100 divided by 150. Day 25. Sent invoice to B. Brooks for merchandise sold on credit, 4,726. The business used the secret code blueprints where B equals 1 and the secret code is LINS-F. So this is what we've learned in chapter 1, that there are different ways in which the cost can be calculated. One of them is using the markup percentage. A second way is using the secret code. So to use the secret code, this transaction happened on day 25. The duplicate invoice number is 25. Name of debtor, B. Brooks, and that's debtor ledger number 1. So they provided us with the selling price, which is 4,726. Now we need to work out the cost. To work out the cost, we're going to write out the word blueprint, and the first letter starts with 1, and this is important. If you don't get that right, you're going to get the cost completely wrong. And then we look at what is the word given. So it's LINS-SS. So that dash SS, remember it means cents. So L equals 2, I equals 7, N 8, S 0. That means that the cost is 2,780. Day 25, also on the same day, but now it says cash sales. Cash sales goes into the cash receipts journal. We sold goods, and now they said to us the cost is 10,700. So don't always assume that the selling price is given and you need to calculate the cost. In this case, they provided you with the cost, which means you need to calculate the selling price. So we start with the transaction happened on day 25, cash register roll details, sales, and the cost was 10,700. To work out the selling price, we have to take the cost times 180 divided by 100. And that goes into sales, bank, and analysis. Now we can draw a line under analysis to show that we've deposited that amount into our bank account. If we've done with all the transaction, the next step is to total. A reminder, we never ever total analysis of receipt. We start with bank, sales, cost of sales. Debtors journal, there's only 2 money columns, sales and cost of sales. The next step is to complete the debtors ledger. So from the debtors ledger, we are going to look at all the transactions, or in the debtors ledger, we're going to look at all the transactions that happened from the debtors journal. Again, you've got 2 ways in which you can approach this. You can look at the transactions and post them directly into the debtors ledger, or we've already done the journals now. From the journals, we're going to take it to the individual's account. But before we start with that, we need to first start with the opening balances. So this is new compared to activity 1. We can't post the transactions and then the opening balances. We start with B. Brooks. On the first day of the month, account rendered, it goes directly to balance. Nothing under debit, nothing under credit. Now we can go and look at what happened during the month. On day 15th, we don't write the name of the debtor under details. We look at what was the source document, invoice number 22 from the debtors journal. It will always appear on the debit side. Why? Because debtors control is regarded as a current asset, which will increase on the debit side and will decrease on the credit side. This means we can calculate the new balance by adding that. Then on day 25, code number 1, that means credit sales, invoice 25, debtors journal number 1 on the debit side, and now we can calculate the new balance. If we go to DUBAR, we start with, on the first day of the month, account rendered 15,400. Then we need to look at the debtors journal. What happened during the month? There was credit sales, which means they owe us more money. This debtor, UBAD, will owe us more money. The first transaction was on day 2, invoice 21 from the debtors journal, 1,320. Very important, calculate the balance after each transaction. Then on day 20, invoice 23 from the debtors journal on the debit side, 2,376. The new balance, 19,096. The last debtor is Naidu. We start with the account rendered on the 1st of January 2024. Go straight to balance, 17,250. Then, during the month, on the 20th, he purchased from us again, invoice number 24 was issued from the debtors journal, 6,564, and my new balance, 23,814. Once we've completed all the transactions, we can take the balance, which is the end or the last figure, and we take it to the debtors list. Take note that we didn't even look at the cash receipts journal, because in this activity, the focus was only on cash sales and credit sales. So there was no data involved in the cash receipts journal where we needed to post that to the individual's account. Completing the general ledger now. There are different ways in which you can approach it. Again, for the purpose of understanding, I'm going to focus on one account at a time and take it step by step through the whole process by starting with the opening balance, posting from the journals, and then balancing the account. And then we'll move on to the next one. So the first account in the balance sheet account section is trading stock. So we start with step number 1, the opening balance. Because it's an asset, it will appear on the debit side. Now we've got 2 journals that we need to take to the trading stock account. And why do I say 2? If you look at cash receipts journal, if you see the word cost of sales, it means it has to do with the trading stock. The cost of the goods that was sold, cash. If you look at the debtors journal, it talks about cost of sales. The cost of the goods that were sold on credit. So posting from the cash receipts journal on the last day of the month, the contra account, cost of sales from the cash receipts journal, and we take the total. Debtors journal, cost of sales, our assets will decrease because we sold goods and the cost of the goods that were sold was 13,350. There were no other journals, so now we can balance or close off the account, which means that we take the debit side and we minus everything on the credit side. The difference is called the balance carried down, means February 2024 on the 1st balance brought down. Right, debtors control. Debtors control is regarded as an asset, which means that the balance brought down will appear on the debit side. But now, very important, if you look at the debtors control, it's a question mark. So how do I know what is the balance? Now, right in the beginning of the video, I said to you, when we have a transaction, we take it to the individual's account in the debtors ledger, and from there we compile the debtors list. We take the totals and we post it to the debtors control account. If we've done this process correctly, It means that the debtors list must be equal to the debtors control account, and that is my opening balance. Because it's an asset, it will appear on the debit side. Posting now from the cash receipts journal. There's debtors control, but nothing happened there. We didn't have any transactions where the debtors made a payment. Posting from the debtors journal, it means that sales, if you see the word sales, it means that debtors control is involved. Goods were sold on credit, which means that the debtors owes us money. On the debit side, sales, debtors journal, and the total. At the end of the month, we can balance this, take the debit side minus the credit side, and that is my balance on the 1st of February. Now we move on to the nominal account section. In my nominal account section, we have all our income and expenses. Very important, nominal account section means total brought forward. The plus is on the credit side, so on the credit side, we will have the total brought forward. And now we have to post from the cash receipts journal and the debtors journal. We've got sales and we've got sales. So we're not going to open another ledger account to indicate from the debtors journal and then another one to indicate from the cash receipts journal. This is the whole purpose of a general ledger. It's a summary of all my journals. So we start with the last day of the month. From the cash receipts journal, my details is bank, the total sales. From the from the debtors journal, my details is always debtors control and what was the total. Once we are done with that, we draw a line. This is now our total sales by the end of January. That will be my opening total the following month. The last ledger account that we've got is cost of sales. Cost of sales is an expense, which means on the debit side, we'll have the total brought forward. Starting from the cash receipts journal, it means that trading stock would have been credited, account debited, cost of sales. That's why that is my contra account. From the debtors journal, it means trading stock would have been credited, cost of sales will be debited. Our expense will increase on the debit side. Then we draw a line and we total. Posting to the general ledger, posting to the accounting equation, we also apply the same principle we've done in the general ledger. You need to identify which account is debited, which account is credited. The first transaction was on day 2, which was a credit sales transaction. We start with the transaction number, account debited, debtors control, account credited, sales. Debtors control is regarded as an asset, that's why it's plus. Sales is regarded as an income, which will have a positive effect on my owner's equity. To show the cost, it means cost of sales is debited, trading stock credited. This you can literally study and get 100% correct. And you can also understand the fact that cost of sales is an expense which will increase on the debit side. Trading stock is an asset which will decrease on the credit side. Why did my owner's equity decrease? The fact that our expense increased will have a negative effect on my owner's equity. Day 8, sold good for cash 7,896. Again, we have the selling price and we have the cost. And the cost we calculated was 6,580. To show the selling price, bank is debited, sales is credited. Assets plus owner's equity plus. To show the cost of sales is debited, trading stock is credited, assets minus owner's equity minus. Nothing happened with your liabilities. I want you to please take note of the following. If you look at the difference between a cash sales and a credit sales transaction, everything is the same except for when we sell on credit, debtors control. When we sell cash, then bank is involved. Thank you very much. I want to leave you with this quote. Education is learning what you didn't even know you didn't know. I hope you have a wonderful day.